Welcome to the Crypto Kingdom, guys. Welcome back to the Crypto Kingdom. We're going to go through some great stuff right now. Today, this is London. Okay, this is the Crypto Kingdom, guys. We focus on pricing entry points. It's an exciting time to be here. We have got some great critical information and updates on Dogecoin trades. Where is it hitting right now? Where are you guys standing? We just had a little talk in our Discord. If you guys aren't familiar with us, I'm going to tell you, guys, we trade. We heavily trade. And in terms of the pricing targets that we bring you, it's all based on Fibonacci's. We focus on these Fibonacci's. It's an update. It's a critical update because we have some things that are going to be in play. All right, there are some levels that are currently being reached. We want to talk about Bitcoin. What's kind of the confluence or the divergence? Where are we at? Where are the primary targets for you to enter potentially to achieve a gain? Bitcoin is slightly off. Dogecoin is a little bit more off. We have Ethereum and some other coins doing well, including XRP on up through BNB. We're going to talk about all that today. Our purpose is to give you a leg up. All right, we want to give you the information in an accurate manner, so that you can capitalize and you can maximize your gains. That's what we try and put forth to you on a consistent basis. So we have been very, very good. Okay, we've been very good in terms of achieving the pricing targets. We've been precise. That's what we focus on. I say a previous financial analyst. I don't know if you ever get it out of your system, but out of Duke University, I did work on hired by a big gun that it was $1 billion equity fund. That's just bottom line. Okay, we work directly across the table with Harvard. If you don't like that, if that's something that bothers you, we're going to have haters everywhere. That's just the truth. That's my background. You don't have to really dig that, but that's the level of accuracy that I can bring. This is not financial advice. I'm not a Series 7 guy who's going to talk to you about your investment planning and your, the next mutual fund or ETF we need to diversify your portfolio into. That's not my goal, guys. I don't want to pick the phone up all day and have people then pick the phone up to me when the market crashes. That's not what I'm going to do. This is all educational. You guys will appreciate that. You guys know what we're into. It's just the fibs. It's the trading software that we are involved in trying to capitalize on. Okay, they give us this software. Binance gives us this software. If we look over on the screen here, it looks like Binance literally gives us the fib levels. Okay, that's the largest crypto exchange in the world. Okay, so we're going to go ahead and work with those fib levels. We're going to work with things like golden pockets. We're going to use that from a technological standpoint. That's what we're going to focus on. It just makes sense for us to do this. I welcome back all our loyal listeners. You guys are phenomenal. I want to make sure that you're able to, let's make sure the music is okay. I think at 5, it'll probably be okay. Should be about right. Okay. Let me know if it's a little bit high in the comments. You guys can let me know. Good to see you guys. If the dogs start barking too much, I may rifle back and take care of the pups. I know you guys are Doge guys, so you won't bother. Little Yipper, I bought a girlfriend a little Yipper, so little yippy dog who wants some attention. So we may have to just leave the screen on for you guys to check out and watch the live price action. We do have it by the minute. This is a premium pro edition of Trading View. Okay, and don't use, I'm going to just recommend from friend to friend, the Trading View in Binance doesn't have all the bells and whistles, guys. It's just, again, this is common sense. Okay, the Trading View actual program here has all the bells and whistles. This has everything we need to kind of talk about this stuff from just an analytical standpoint. We can analyze anything. We can analyze the newspaper. We can analyze the news. We have to be critical in the way that we approach things. And if you guys want a financial advisor, I do know. I know some people that I almost went to work with at Morgan Stanley, Smith Barney Morgan Stanley. So if you guys want a recommendation to that, I can give that to you if you'd like that, but it's not going to be me. I'm not filling those shoes for you. What I am feeling is, as we're looking right now, we're looking at some different ideas in terms of what is the program telling us right now. It looks like kind of a mess. Let's clean up some of this stuff. We achieved a positive dynamic here, and I may have to go get my little Yorkie. We call HD because literally she runs around in hyperdrive. We call her hyperdrive because she's a little lightning pup. She likes to just get up and go all around the house really quickly. So I'd like to see pictures of your pups. If you guys got dogs, I know the Dogecoin crowd is all into all things dealing with pups, dealing with dogs. So that's nice to. You guys are a great community. We really enjoy being able to come with you, to experience you guys in a good environment like this. It's nice. You guys are professional. We have everyone from VP directors, literally a part of the community, regional managers with corporations and businesses, and it's just a nice environment. So don't question all their credentials. Just don't pull that up. You guys get to know them before you judge them. And I'd ask that you do that with the channel as well. Now, as we look at kind of the fib levels that are developing, we're going to get into how to work these specific levels and exactly kind of what they're telling us. Let's go, let's readjust the fibs. We want to, scroll up, right click the fibs. We want the labels on the right. We want to clear this up a little bit. So we're doing a little bit of spring cleaning right now. We wanted to make sure always, always that our fibs are perfectly drawn. And that's kind of what we're looking at. Now we broke out of, I'd say we almost broke out of. As we look at this, have we broken out of? This is what I shot you out some information on. Did we break out of for sure this this specific channel? Okay, and it looks like we're breaking out of it, but I do want to bring this back up because it's just kind of crucial. We had drawn in, and I'll change the color of this. Let me get into this potential line of support here. It looks like it has broken, but let's go ahead and let's draw in kind of it was a triangulation that it turned into maybe a flag. Let's look at, it's these two issues right here, and that's what we can, if we zoom back out on that, we'll be able to show you guys what it kind of tried to form here. Now, looking at this, it looks like it tried to kind of form a little bit of a bull pennant, okay? That would be important if it decides to get the positive trajectory back up. This is something that could be traded. Now, you'll notice one of the dangers of trading a bull pennant, okay, or some sort of a triangulation pattern. I'm not going to get too technical, you guys. We can do that later. But one of the dangers here is that these kind of expand along the way. So your entries and exits, if we're looking at this from a bull pennant standpoint, it definitely could have just broken out of that. We kind of regress down into what we would call a bull flag right now, and that's just the parameter here. This trend line established. A trend is essentially a contact point along a resistance or along a support level. So we have this support level in and around here. We have a support level potentially in and around here. So it's looking like it might kind of get this bounce. This is on the 1 hour. Why don't we change this over? Let's see. Let me see what I can go. This is the 30-minute. You guys want to go to the 30-minute? Let's look at this. I'm going to explain some time differentials here so you can kind of see. Now, as we look at kind of the potential bull flag here, okay, it's literally just, guys, think of a flag. It's real easy. What technical analysis tries to do is allow you to look at the history of something, the pricing history, and essentially there's kind of a global conformance to a standardized way of thought, a means of thinking in terms of like something that can be traded. In terms of, they don't want to say a self-fulfilling prophecy, but it is kind of a group mindset, and that's what I've studied for a long time, just on an individual basis. I also studied markets at Duke, so yeah, this is just kind of what I love doing. But this would be a classical kind of a bull flag, okay? Now, it looks like on the 30-minute, for sure, it's broken out of that. Now, the notion is we want to start kind of looking at potential, I'd say Fibonacci's at this level, because as it starts to break down, yes, you can even trim this up, and yes, it turns into a situation where, and this is the problem with charting, guys, I don't always bring these circumstances up because they're very ill-defined, okay, and they're very subjective. You're looking for a breakout, and you just start changing the nature of these to where, and from a conformance, pattern conformance here, we breach this up in the upward level here. We have a gap here, and what could be otherwise viewed as a bull flag. If we were looking at this as a bull flag in that direction. So we don't like that. That's not going to conform with our requirements that we have consistent touches all the way along. So now we're also looking at, we need consistent touches along, if that's on the resistance, essentially if we look at the support level, and that's just the support the pricing is going to reach. If it reached this as a potential support again, which is a fallback from a triangulation pattern and a breakout of the triangulation, if we look at this, well, now it looks like we have definitely breached that bull flag, and we're looking for some downward trajectory, which I'll explain can be positive for you guys, okay? Because then it can create a circumstance where you have a positive entry, okay? You have a positive entry for pricing if you guys choose to trade this, and always do your own research and your own homework. You guys know that. Now we have kind of a complication here. I want to talk about this with you guys. You're a sophisticated group. You're into technical analysis. I know that. As we look back on the channel, you guys have had a great amount of success on the different entry points. You guys, I've talked with you. You've had a lot of success here. That's on 2 different Fibonacci's that were drawn along the way. The question is now, are we going to draw another Fibonacci for this subsector and trade this at a micro level? We'll talk about why we might want to do that, why that may be possible, based on probabilities and kind of our determination of the mathematics involved. I want to bring up Twitter. You guys, Twitter is a great resource. We have spaces. We're able to have discussions. Also, our Discord. Now, as we look at the Twitter, let me kind of write over, and I think this is. Let me go to Twitter twitterhome.com, Twitter home. I want to bring this up because, guys, I want you plugged in as much as you can. We have a great community, a lot of people supporting the community, etc. If you go to Twitter and you type in, some of you don't like it, guys. I'm going to explain some funny things about this. But the kingdom, just type in the kingdom in your search box. It could not be easier, okay? Because what happens when you type in the kingdom? Well, you scroll to the bottom. We're not one of the featured people. We don't pay. This is all organic, okay? So go to the kingdom, all right? Click on go to the kingdom at the bottom of that. And here we are. Just click on follow. Turn on alert notifications. You'll see a bell here. Turn on the notification, that alert system. This is us. I like our new profile picture. This is the Space Ranger with the laser eyes. Crypto Kingdom is crypto with a K. Now here is the Discord link. After you guys follow, make sure you plug into that Discord link. Okay, that's going to be crucial for you guys to stay in touch. We just had a conversation about the price action on Doge on the fly as things were happening. I was in the car and I wanted to make sure that I got to you guys and was able to touch base with you. Because we had talked about the triangulation here, the possible triangulation. Now we're talking about a potential bull flag and a breakout from that. The next step is, well, do we have a fib? Is there a Fibonacci that we can look at? What is happening in terms of the dynamics, okay, the pricing dynamics? Now it looks like we've already received a small bounce on the first level of fib, okay, which seems to coincide in this interestingly, okay, it coincides interestingly with what we just saw, which is and let's bring that back up, guys. It's coinciding right now, interestingly, with this line in and around this area, okay, with that lower level of kind of resistance. Let's move this up, and the closer we magnify in, the more precise we're going to be. So as this is done on the fly, just understand these are the technicals. This is a technical program, and we're just getting into those technicals. So it looks like we got a bounce here, okay, already kind of a bounce, and let's make sure these are squared up. I always draw my fibs, guys, on the actual lines, not on the candlesticks. It's just what I do. It's important. We can really get in on a nano level and understand these things. But right now you're crammed in between this previous line of support, okay, and around this range of the bull flag. So what this may turn into is a rejection here. It may conquer back up and decide to go back up, but that's the first level of really the second level of the fib, the 382. That's a 38% retracement. From the bottom to the top, a 38% retracement, okay, is going to hit in right at that 24 cents, the 24.728, okay. We did have a prior possible trade on this diagonal channel. Now, what happened? Well, we talked about that last night and the fact that it looked like it was kind of it had reached its threshold, and I can explain how we kind of determined that. It had reached its threshold. It decided to achieve some lateral action. Typically, when that happens, it can regain strength, okay? We saw it regain strength here, but it also can break down. So when we achieved lateral action here after this huge dynamic, you see this was a diagonal channel here, and around this price action on Dogecoin for the 17th of April, it was just a phenomenal diagonal channel upward. We got this pricing target, beautifully. The program got it, guys. We were able to communicate that to you. But in line with this, huge ramp up, the huge ramp up, okay, was it came at the kind of the end of this channel. It's like everyone, oh great, it was just through the roof, right? So this could have happened here, okay? We could have applied kind of a derivative analysis and said, okay, at the end of our diagonal channel, what's going to occur? Well, it seems like we got an incredible new high that formed in there, and we'll redo our fibs. We'll make all of this perfect. Every time you change time frames, guys, be aware your fibs are going to change. So if you see something incorrect on the screen, I'm about to get to it. We will, we'll try and stay as accurate as we possibly can. So we bring that up in terms of evaluating this, and what we did was we looked at the prior action here, okay, the prior diagonal channel. Last night what we did is we looked at, well, let's go ahead and let's look at this sucker. Let's look at how much was achieved. One of the derivatives or derivative analysis kind of key indicators that we're going to look at, and what can we derive from the previous events that have occurred. Well, we look at that gain, 74%. If we go to the candles, it's about 85%, okay. Now that 74% on the lines, the 85% that we looked at last night, we did a derivative analysis. What can we derive from the previous, or bring over and carry from the previous historical action in the charts, right? Exactly, from this period of time from the 17th of April on into the maximization at the 19th, this new high that got formed. Well, that was a diagonal channel. It broke to the upside. It achieved about a 75 to an 85% increase on the price. Beautiful. So let's apply that over here. All right, on the lines, we have about a 50, right? About a 50. If we carry that over the candlesticks, guys, it gets a little more interesting, okay? If we carry this to the candlesticks, about a 50, 55, all of a sudden, if we do that on the bottom of the candlesticks, we're at 81%. You guys see that? That 81% is relatively threshold kind of area that's from the bottom here, measuring the distance, okay? We took the ruler out, okay? We got the scalpel. We want to know what is the maximization, what's the threshold on this level? We brought it out, we discussed it last night, so you guys were prepared for the fact, well, we've reached our threshold, right? Now it could have just taken off to the upside and had a 100 or 200% gain. That's not necessarily, going to happen. That's not necessarily, probable. Let's say that. That's not in line with the previous pricing events. You guys let me know if the music's okay. You guys like the music? If that's is a bit too loud. If it's a bit too loud, I'll turn it down just a little bit if it's bothering anybody. Let me go down to a 4. Let's go down to a 4 on the music. Let me know if the 4 is better. If it's not, we can change that up a little bit as well. I'm also listening to the music as I watch, and it's also through the program. So let me know on the music if that's good for you guys. And the purpose today is to bring you the information that's kind of really relevant, highly relevant to the charts here and to the pricing. If you guys like this information, you want more videos like this, go ahead and give me a thumbs up. I know it's a highly technical crowd. It makes a difference because I just know that you're with Dogecoin. You're with the opportunity to trade Dogecoin, and that'll make a big difference for us. This was kind of a rushed, not really rehearsed. I won't say rushed, but kind of a necessary stream for us to get into. So that'll help us know that you want more of these. We don't typically just jump on in the middle of a Saturday while people are busy and say, great, let's go ahead and let's trade Doge. That's more of an evening deal. So you guys hit that thumb up if you would like more, if you would like this stream to continue, and we will continue with the stream. So we got about 47 people watching and 14 thumbs up. Let me know you guys are interested. We'll have more people, cycle in here. So that'll be important for us to look at. Just their diagnostics, their channel diagnostics. So we look at that in terms of your preferences. We want to bring you what you prefer to do. Now, it may not be fun because Dogecoin is falling out of the channel. You may not want to watch that necessarily. But as you look at that, guys, these are the pricing entry points. Okay, these are the opportunities for entry. You know, that first level and around here, literally up to 24, and that's after the major break through the red zone. We know it gets reasonable to start to think, well, maybe I'll invest in this area. Okay, so you see a direct bounce here on the candles. You see exactly, it's only going up 4 or 5%. Not a really heavily traded area. What that is doing is it's creating some lateral or sideways movement. Okay, just ever so slightly, it is creating some lateral movement. You also see it was hit up at this level as well. You guys see this? This on the candlesticks, that top level was hit. Okay, it was hit just kind of very lightly, just boom, just a little bit right along there. Some orders went in, no problem, creating that sideways trajectory. All right, very positive, creating that sideways trajectory in the price action. Now, if we're going, there's two ways we can move. We can move vertically and we can move horizontally or laterally. So as we create some lateral trajectory, we are kind of reinforcing a kind of a bull standard. Now, Dogecoin hasn't had a problem with that, guys. It has behaved very well in the past. So this was an entry point. If you look at the overall kind of micro levels of this Fibonacci that has been drawn out. Okay, so it's good for you guys to see the pricing action, to see these different levels, guys. These are just different entry levels, depending upon kind of where the overall, let's just say the pricing dynamics, where they're falling after, and this is done on every single, pricing event, every single, circumstance where we have a nice rise in the price, we're going to get a retracement. Every time the price goes up, believe it or not, it does go down. Okay, that's a dynamic of the supply and demand, the orders, on the buy and sell side. That is the dynamic that we look into. It's going to go up and it's going to go down. It's just a function of the nature of price action. So we look into this and we're saying, well, these are our fib levels, right? Now, what we want to look at very, very carefully, guys, is the carryover between the previous fibs, all right, between these previous pre-designated kind of calculated levels and around here, and how they carry over. And let's clean this up just a little bit. How do they carry over to the instant fib, okay, to the instant level of the Fibonacci's? Are we, do we have any confluence, or do we have any kind of layover dynamics, all right? Are there any things is there anything that's the same? Because as you look at this, we're going to run into an issue where, like the yellow line, for instance, let's look at the yellow line. Let's see what kind of confluence we may have, or kind of overlap. And the closer we get, the less of an overlap there will be. But we're looking around this, 618. The golden pocket on the entirety is about looking here, about the 20 cents. Okay, we called that 20 cents. That was a good call for us while we were involved in this radical dump to the downside. Was 20. And guys, I called that out, the 1948. Literally, it was just it's a calculated level. I'm going to go to the Discord for a second. so that we can, let's see. I don't know what that is. Or did I know that? I guess I knew that. We'll get back to that. We brought up the 1948. That's our Discord channel. And I want to just show you that we brought up that 1948. That was literally, and this is our Discord, guys. It's where we're all able to talk, have conversations, etc. The 1948, if you're looking here, the 1948 position on Dogecoin, that executed. That was a nice entry while things were just falling from the sky. So during this period of time, when things started to really break down, that entry level right here, if we say an entry level, literally was at the hold steady point after, let's say before we gave the pricing target. Again, it was calculated, guys. We're able to calculate that when we share that with you. When it hit this level, that 1948 stabilized, all right at the pricing action. Then it was a gradual gain. I'm not sure who's still in that or who decided to trade it. I've talked with a few of you that have, were entered in a specific level, and they were able to, you guys were able to make some money on that. That was nice. I'm glad that you guys were able to make money on that. Also, we have recaptured this golden pocket in around this area. If you guys have held on, we haven't had a break in the action. It's like every single target. That was a big breakthrough, breach. I'd say a big breach. It caused by Bitcoin, a failure to maintain its channel, and it's just we're subject to kind of the whims and ways of a lot of the big heavy money in Bitcoin. But we're kind of conquering that. I'm going to say we're kind of conquering that. Now we're seeing an inverse relationship, guys. Inverse relationship with Dogecoin and kind of the rest of the market. It looks like VeChain is kind of along with us in the red zone. Bitcoin is kind of trending a little bit with us, but you see Bitcoin is down just slightly, just ever so slightly, barely off at 49,000. Well, Dogecoin's off at about 6%. So we know, though, it's not necessarily down. It's not a bad thing. It's just that we have entered into kind of a retracement phase. So that's positive. Let's look back at the line chart, and I'm going to break down a little bit of, let's see right here. I want to break down just kind of, the overall notion here is it looks like we are going to bounce back in this level. Okay, this flag is holding true. We brought this, this is the backup. This is why I got on the phone call real quickly with some guys in Discord and also Twitter. We have spaces in Twitter. We have channels or communication lines in Discord. So we're able to communicate with you guys on the fly. Bam, we're on, and all you guys get notifications. You're on. We got 20, 30 people on a chat, or it could be 50, 100 people on chat. So it's about equivalent with right now on YouTube. Understand on YouTube it's different because it's recorded and 2,000 to 3,000 people wind up watching the YouTube. So that's nice. Sometimes 6,000, 7,000, 8,000 people wind up watching this stream. So it's important that you guys are able to redirect into Discord, into Twitter. They're communication channels. It's how we were able to communicate with you guys. It's a pleasure to do so because you're very phenomenally professional. You guys are great and it's one of the best communities that I have experienced in the crypto space. As a matter of fact, you guys are very kind and nice. So as we look at the support level, the previous support, what happened? We broke out of it. We are trapped in this little consolidation zone now. It's like we have bounced right back up to this previous support line. We have used that now as a resistance. So that's a classical breakout, of the overall pattern here. This bull flag that we were hoping might stand. This is exactly what we talk about when we talk about confirmation. We need a confirmation of a breakout of the previous pattern, right? So that's nice to see. Now this will be confirmed when? It'll be confirmed when essentially it breaches through this level, and by this level I mean the previous level of this previous level at which it decided to use as kind of a temporary resistance. When it breaks through that resistance, it's going to travel on down. It should travel down potentially to this next level, this next retracement. There's probably nothing in between these two levels until it gets down in here to the 50% retracement, which is about the 23 cent. Now, in the process of this, if you guys are trying to pick up coins at a good price, I would just urge you, okay, to look at your Fibonacci's, do your own calculations, and understand it just makes sense from a market perspective to have more money or more demand at a lower level. That's basic economics. That's basic business. That's exactly kind of what you're understanding. Okay, so some people want to know potentially. I want to talk about this retracement in the context of Bitcoin. All right, let's look at Bitcoin and what it's doing. I think it's really a phenomenal story with Bitcoin right now. Bitcoin is in a consolidation pattern. It is beautifully consolidating right in line. And be careful about drawing your, and I'm just going to say this in terms of drawing your triangulations, because guys, you're putting a time frame on things. Most people don't understand the time frame element. If there's an early break, that's great. But when you put out one of these, and you won't hear it on other channels as much, but be careful, guys, because you're running into a potential time issue. As you're defining this sine wave, if we look at this and say, okay, we want to look at what a sine wave is. The sine wave is something with a frequency, with a periodic nature, right? So as we look at that, yeah, it's got lows, it's got highs. Now this one is consolidating within a triangulation pattern, but this one has an end, okay, a feasible, kind of a structured end to it. It's something that we can see that it, potentially is going to have some sort of a downside. Now it gets real technical as you start to move these. When you talk about timing, it becomes a very precise issue. Now this is important because it's affecting Dogecoin. Okay, it follows or it doesn't follow. It'll create essentially a correlation negatively or positively. Positively means it follows. It follows Bitcoin. Negatively, if there's a negative correlation, it doesn't. It moves in the opposite position. But as we start to get really precise, guys, with this, just understand, okay, when we're drawing this, look at this, guys. When we're drawing this is the level of precision that you kind of need to understand that, yeah, maximally, if we were to really look at this, we could theoretically be looking at another day and 8 hours or another day and hours wherein it is refusing to break out of this channel. Okay, so that's a day and 7 hours that it's refusing to break out of this channel. That's possible. Now, those assumptions, that time frame depends upon exactly how you're drawing your line, which depends upon what? Which depends upon the time frame that you're looking at. This is the 30-minute time frame. Let's switch it to a 1 hour time frame. All right, a 1 hour time frame. Now things were adjusted a little bit slightly. We could kind of move this and make an assumption, well, that's more in line kind of with the resistance. What that does is you make different assumptions. That's why I don't always bring these to you guys, because in terms of timing, we like to be extraordinarily precise. We're within like 5 minutes sometimes, okay? So when I see a pattern, I'm not all that inclined to go ahead and just draw it on the map, because understand, it may break at any moment. Do you guys have another day to sit there and watch the charts the entire time? Maybe. Maybe not. If it wants to, it can play around in this pattern for another day and 3 hours. Okay, that's the difference. A day and however, what was it? A day and 8 hours. Okay, just moving this line to the top here. That small change in the pattern here, in the triangulation pattern. Now we're at a day and 6 or 8 hours. All right, so that's what we're looking at. Those small adjustments, these micro adjustments. As people, we work on timing. We're very, very detailed in terms of timing. We want to know exactly the time frame, because essentially you're going to be glued to this thing, wondering and needing an update. Has it broken down? Is it broken out? And the next thing would be, well, it decides potentially that it wants to, and just pay attention to this. This is based upon exactly what Dogecoin is doing right now. Let's go into a polyline. It has gone like this, right? It's triangulating, right? Yeah, it's triangulating. Well, now it wants to go like this. Let's say it wants to go like this. All right, now what do we have? Well, now we have a potential bull flag, just like what we just went over, and this has to be completely redrawn. Because the assumption is not a bull flag, it would be a bearish continuation pattern. Bull flag's gonna be on the way up. This would be a bearish continuation pattern, bearish channel that's forming here. But it could change from a triangulation to a kind of a bearish continuation pattern, which a triangulation may be. That triangle may already be. But the point is, if you're trading, understand this. If you're already trading, okay, this triangulation, okay, if you're already trading that triangulation, hello, we have a completely different scenario. And if you're playing the breakout of this, we just saw this happen in Dogecoin. If you're playing the breakout right here, oh, it's broken out. People enter into a position, a short position with leverage. What's the problem? Well, they could just decide to turn into, sort of a channel trade. And it could just do that, in which case we're going to run back into a different ideal here that needs to be restructured on the whole. So I don't like to call channels early. I just don't like to do that. If it's in with some incredible momentum, I don't mind doing it. The argument here would be that right now we are in kind of a real bearish sentiment here. Now, no one was really expecting this turn to the upside for Bitcoin from this 47,000 up to the 51,000. No one was really anticipating that it would retouch kind of this critical level here, the 51,400. No one was really expecting that, or really expecting it to get back into its zone. It may get back into its zone. You may find that, well, the next thing we know, we're back up in around 57,000. That can happen. Is it probable? The most likely scenario, and if you look at the textbooks, the continuation pattern is built to kind of drop down. That's what this consolidation is going to kind of prove to us or show us. The rough estimate of that is going to be in and around the, now again, you're flirting with another fib retracement level and around the 43,000. If it breaks down below that, that's the dangerous thing about this specific continuation pattern, is that you're looking at 42,000, which is below that, which would be very bearish. Okay, and you're not going to hear that on other channels. The fact that on the Bitcoin, and this affects every coin, guys, your altcoins are strongly affected by this. Just pay attention. Because if you're going to play this continuation pattern, let's remove this sine wave. Okay, I'll just put it up here so you guys understand what's going on in the channel. Okay, in this small channel. Within the context of this, the potential breakdown of this channel could land you below a kind of a reinforcement line, which is at the 44. Now you can make an argument as to the fact, no, London, I disagree with that. I think it's just going to be the nature of this, breakdown here, and we're just going to go with this assumption and assume that no one else is going to leverage into the most bearish potential on the breakdown after we just broke down for the first time in 2021. So make those determinations. Go through the logic. We have two kind of potential negative breakouts. One is 46. The other one's going to be well below the reinforcement line at 44,000 and hit on into 42,000. As you make your pricing targets, not only on Bitcoin, guys, as you make your pricing targets on Dogecoin or any other alt that you're involved in, you need to understand the pricing mechanisms and whether or not you're in a positive correlation or a negative correlation, whether or not you're going to move in the same direction as Bitcoin and this fall off. Most did. Most got hit very heavily when this broke through, and not just the overall retracement. Things got really severe, in terms of the fall off in the alts when it decided to really crank through this top level of the Fibonacci. That's kind of a key indicator to us that, we're going to be going through some degree of a Fibonacci retracement cycle. Is that the bear territory? Not necessarily, guys. And there's a lot of money to be made as things retrace. So get prepared. But also, this gets into some let's say some highly technical diagnostics in terms of where is the where is the flux here, where do the odds what are the computations telling us? So that's why it's critical now to look at the fact that I'm not real wild about putting up charting patterns. I'm not real crazy about doing that while they could still be in flux. And understand this is the way on Dogecoin. It's the way on, if I'm looking at VeChain, XRP, ADA, Cardano, whatever I'm looking at, BNB, Ethereum, whatever I'm looking at, I'm hesitant to do this unless it's really, really confirming that, yes, this is a channel. Because I don't want people to trade on leverage or an option. And not on anything I say, guys, it's for educational purposes. You know that. But I don't want people involved in something that all of a sudden it turns into, well, now it's just a different kind of channel. And now it hasn't necessarily even broken out. So just be prepared. There is a market kind of, a dynamic where people will start to act and behave based upon what's said. But guys, in the other channels, I'm going to bring this up. In the other channels, right now, on the most popular ones, you guys are literally getting told 8 ways from Sunday with people screaming at you what is going on right now. What is about to happen? There's a huge breakout here, and they're retracting every 5 seconds. They're literally changing around and putting up a brand new video about how they didn't just say what they did say, and now it's going to go the other way of what they did not say. And I'm like, come on, guys, you guys are more intelligent than that. As I look at those, some of those guys are, it's just not nice. Are they selling a subscription to Bybit? I'm sorry, I'm going to go ahead and say that. You're going to make $500 to $1,000 on the 5 or 10 people that decide out of your 200,000 people to sign up on Bybit. And you're going to do what? You're going to invite people. You guys, please pay attention to this. I want my core loyal listeners to hear this. You're going to invite people to go in and do a leverage of 30x on their money. And you're going to profit off of that. And you're hung out in Dubai to do that, to invite people to click on your link, etc. You want to invite people while you're flipping around back and forth, and you're telling people that you know and then you don't know. And look at this, the first time we've ever found this every 5 seconds. That is just sensationalism, guys. And I understand some of them have classical educations. They have degrees. That's fine. I would rather deal a little bit with the fundamentals. I would rather just say, let's look at, let's do this. Let's look at the retracements. Let's look at something that's literally been calculated by us, not one time, exactly targets, exacting targets. Because they'll flip around and say, the fact that they would invite you to go on leverage when they're flipping back and forth, I find that just horribly concerning. And they're not financial advisors either, so I guess they can do whatever they decide to do. Let's look at the this vertical line. Bam, we gave you a pricing target. Hello. This vertical line that we're going to put up here. Bam, we gave you a pricing target. There you go. Pricing target in this area. Bam, look at it. This one here. Pricing target. Bam, there you go. So, and these are on the fly. These are just, because it's calculated, guys. It's not a guessing game. And the idea is to have a reserve. To have reserve componentry on the bottom so that you can mitigate any investments at a higher level. The worst thing we see, the worst thing I hear is, well, I got involved too high, at a too expensive of a level. Not by listening to me. And first of all, in terms of trading, you make your own decisions, okay? But understand, I'm the guy that's telling everyone, I think it would be smart for us to comply with supply and demand. So, the market mentality, economics. At a high price, you shouldn't have a high demand. You shouldn't have a big investment amount. You're contravening the dynamics of a demand curve. As the price lowers, you have more demand. That's basic business. That's basic economics. So enjoy that fact. Just please pay attention to that. And that's just critically important as we look at the investment dynamics here. And you're not gonna get this. Here you click this link and go get into 30 times leverage on your money. That's the riskiest thing you guys could ever do. And I just wouldn't suggest that. So we try and focus on fundamentals, okay? And we focus on the kind of the framework that we're very technically adept to. And you guys, a lot of you are professional in the group as well, and we really appreciate that. So Dogecoin looks like it is falling down while Bitcoin is in a consolidation pattern. It looks like it's going to want to hit this. It has breached through this. Again, let's go back to the 30-minute chart. Now we see that rebreach. It's trying to go, I'd say a reconfirmation. It's trying to confirm, or the original breach. I doubled both of those. This is the double down approach here as we get into the lower levels to confirm the fact we're in compliance, kind of compliance and behaving rationally. Okay, at the lower levels, we'll have more demand. That's just, if you don't abide by that, I don't have to worry about it, because you'll wind up telling me, and I'll just meet you later on or something like that, and you'll tell me, well, we put all our money in at the top. It's just, you don't buy high to sell low. You just don't do that. So we can make it more comical and entertaining, but that's just the bottom line of a classical education. That's the benefit of your and my classical education. So we know right now we are kind of trying to reconfirm this. When this breaks down, okay, when it breaks down past this level in and around this 38.2%, the 24 cent line, 24.7 cent line. When it breaks down here, we would expect the next level to get hit. And again, as this is going down, as people want to accumulate, etc., I always bring up, it's just there's no money here. It's just too expensive, right? We called this threshold last night. People may have held on. That's fine. For those who hit our pricing target, I want to congratulate anyone who listened last night and was able to hit the original pricing target and decided to exit in and around this area. You made 40% on your money. That's okay, guys. That's a good trade. For those of you who hit 10% and 20% or whatever it was in around this area, decided to get out. Those who decided to get back in on a potential channel trade and re-execute a protective stop order. That's fine. That's dynamic. That's what we try and constantly do is capitalize, especially guys as we're in kind of a downward cycle, as Bitcoin is dropping off here. As Bitcoin is dropping off, we're looking at kind of how we can profit through this portion and not over leverage ourselves with margin, etc. We can do that. I mean, anyone can do that. You can get involved in margins. It's just very risky. You get a margin call and your whole year's over. It's just not. It's not what It's not the longevity approach. It's not a sustainable approach to what we're trying to achieve with the community. So you'll see this just general falling off here. And in terms of how much time can Doge go through another positive trajectory, I think so. While this if we look at the price action, if we just have another potential day here, and let's just carry this out real quickly as we can do kind of a derivative analysis. I'm big into a derivative analysis. That means applying the history forward. It's not an exact science, but it can become very exact in terms of the science. But I want you guys to look at this, okay? If we were just to kind of apply this over and take this line, it's called a polyline. You guys will find it right here, right above the text box, okay? That text box, you can click on this, go down to polyline. Looks like a scuba mask. So as we're looking at this, if this duration, if this frequency were to kind of last through the current aspect of this cycle here, we're looking at potentially having, again, let's look at the triangulation. We went through that just a minute ago. Another day and maybe, a day in, 12 hours, day in 10 hours, day in 8, 9, 10 hours. That's okay. Maybe a little bit less than that, day in 5 hours. We're looking at another day in this zone. Okay, so maybe the rush needs to translate from, okay, we have to make a position right now based upon a potential breakout. We'll always watch that, but we have to juggle that. We have to juggle that amidst the time that we're looking at Dogecoin. What's the behavior of Dogecoin while it's consolidating? Well, while it's consolidating, look at what we're doing. We just achieved a phenomenal gain. on pricing entry. Some people got out again at 10 or 20%. That's fine. Some people wrote it all the way up. They probably listened to last night. I'd like to hear from you guys. If you're doing well and you're executing your trades, your strategy, I'd like to hear your strategy. We have a group called Alpha Traders, and those are guys who just committed to learning along the process and kind of the overall strategy of what technical analysts do. And you can, there's materials, all types of things you can. I'll say this: everything you can read is probably out there. I mean, you may have already read it, and if you have, that's fine. But we try and bring some of that home to you. So in terms of the delivery of that information, we'd like to be able to help say, yeah, we kind of helped you learn that, how to learn how to work TradingView, work a Fibonacci, work a time interval, a derivative analysis, just different things like that, understanding a price target. And guys, listen to this. This is a great story. This morning I went to a community church, etc. A big fancy place. Don't judge me on that. You'll like the story one way or the other. Or I always tell people not to judge anyone. Just you kind of receive everybody. It's a nice crowd because we don't do that. I met with a Bible study leader, and it was kind of a stuffy deal. And I was like, okay, Bible study leader, everything. And he's like, well, where have you been? What's been going on? I said, well, I've been involved in in a crypto channel and putting together YouTube, etc. And he's like, oh, okay. And I'm like, he doesn't like this. I'm thinking he doesn't like this. And then after I'm finished, he kept saying, okay. It's like he wanted to talk. I thought he's not happy with that, or it's a Bible study teacher. And then he says, he's an awesome guy. I love him to death. And he says, well, you know what the difference is? He's like, a couple months ago, I happened to get involved in Bitcoin. I'm like, really? I was like, you got involved in Bitcoin. That's great. And this is my Bible study teacher at church, and a big group, fancy, big church guys. And he says, yeah, I got involved in Bitcoin. Then he says, unfortunately, I got in at a high price. I'm like, oh no. I was like, oh no. I was like, you need to watch our channel, because that's what we do, is we focus on accumulation at the lower levels. So a lot of people need this philosophy. You guys understand, people are involved in Bitcoin. It's very popularized right now. But we need to kind of reinforce to everybody, well, there's nothing wrong with saying, hey, did you get a good price? What price did you get in at? We all ask that question of everybody. So if the purpose of this channel is to reinforce the fact that literally at a lower price, you stand to make more money, it's not to discourage anyone from getting in or not, or to provide advice. But I just had another meeting with someone who was saying, well, yeah, I got in at too high of a price. I hear that all day long. So that's what the Fibonacci's give us, is a pricing structure, a guideline to have more demand, more dollars at the lower level. Okay, and shout out to everybody that's involved with my communications directly. It's just a pleasure to know you guys. You're all a blessing. You're all just good people. So I want to cover one thing real quickly. The relative strength index, okay? There's a variation here that I really want to cover. Now, there is the relative strength index is relative. As the price goes down, okay, we get into a position below 30 or above 70, okay? Above 70 is this black area in here. The below 30 is going to be this area in here. Okay, this means that it is oversold. All right, that means we're expecting a positive price trajectory. This in this area above 70 is overbought, meaning we would expect it to go down. Now, I bring that up because there's a differentiation here, and as you look at this as a buy and sell signal, it's why it's very good that you guys are on live right now, because I want you to see the difference between, as the price does go down, as the price continues to achieve, let's say, a negative price, as it continues to head lower, right? As it continues to head lower into our Fibonacci areas, you may start thinking, well, how much do I put in at different levels? That's why it's just nice to have kind of predetermined, kind of, peppered in at the top. That's what we say, just, a light amount of money, just peppered in. Just something, you have some demand, it's less expensive, right? The next level, maybe we double down a little bit. Next level, yeah, we double down a little bit more. And the next level is double down more. The double down approach is a very popularized, a very, very key investment kind of mantra that I've heard. You guys, you'll hear it on Bloomberg. You won't pick it up. You'll hear it from the top traders on the street. You won't pick it up. I pick it up and kind of let you know that's what's being discussed on the street. Okay, that's what's being discussed in terms of a strategy, because it covers your overhead position. Okay, that double down, triple down approach, that covers, guys, your position at any higher level. And it typically will hit at one of these predefined these categorical ratios, okay? And the 50%, it's just a 50% retracement from the beginning of the trend or this recent pricing action to the top of the trend, okay? And down at the different levels. It's gonna hit at the 382 for a bit. It's gonna hit at the 0.5 or the 50% retracement. And guys, when I say it's already calculated, the actual figures, they're right here, guys. They're literally right next to the 0.5 is 23 and 5 cents. The 61% retracement, the golden pocket, literally is the 22-cent retracement. So as we double down into this area, I just like to provide a framework for you guys to understand. More money at the bottom will provide for kind of an insurance, okay? It's going to provide for greater exposure to the coins at a cheaper price. That is what the whole goal is. As you look at, it's at 25 cents. All right, we want to achieve what, essentially like alpha. Alpha is the percentage gain over the standard trajectory of the price. The market will, let's say, achieve 10%. Okay, on the year, it achieved 10%. Well, we traded, we made like, we made 100%, or we made 80%. Let's say that's 70%. If you made 80, that's alpha. Okay, that's how you can trade and beat the market. So we want to achieve alpha. One way we do that is maximize your returns is achieving a lower cost basis. That lower cost basis is a lower price per coin. Okay, it's just basic economics, it's basic business. If you don't achieve this kind of the double or triple down approach in your mind, or waiting until we get into a certain level, now you risk losing, okay, if it hits into a level and it decides to take off to the upside. So some exposure might make a little bit of sense. If you do that those mathematics and you agree with that, that's going to be your decision. But I like framing things in terms of having some exposure towards the top, just peppering it in towards the top. This level that it reaches. This we double down in here. Not much money. I would normally say maybe $100 in here. Maybe it's $1,000 for you. Maybe it's $10,000. I don't know. That's your decision. But if you're playing with 10,000, you might have $1 million down here. Believe it or not. Why? Because if you throw the $1 million in up here, or if you're playing with 1,000 or 5,000 or 10,000, you throw the whole amount in up here. Guess what? When it goes down here, you're going to be complaining about the fact, well, I'm overexposed. I'm at too high a level. I didn't get a good price. Yeah, so it's real easy, guys. It's real commonsensical that we would common sense that we would be able to derive this logic that's in line with market principles. That's what we try and do, guys, from classical education at I guess a liberal arts school, Duke. I hope you guys aren't haters of Duke. If you're a UNC fan, hey, I got some love for the Tar Heels and all basketball teams, football teams. I enjoy sports, and this is a fun activity for us to get into. So it looks like this level is kind of going to be played with a bit. As it does go down, just remember the top level. Maybe we pepper in some funds. Maybe that's a good level because it's getting a little cheaper. It's into a zone where it could decide to take off. As we go down, maybe double, triple down. Okay, that's just going to cover your investment at the higher level. That's the mantra. That's the strategy. That's what we kind of that's what we stick to, and it's worked out phenomenally well in and around this previous level. It's just using the Fibonacci's and the essentially the kind of the top dogs on the street. It's using their strategy. Now they may have different. Again, if you guys want a financial advisor, I've got friends that work at Morgan Stanley or J.P. Morgan, investment bankers. Be happy to refer you guys to their divisions or whatever they're involved in. So yeah, this is just kind of an interesting crypto channel. We're going to talk about the pricing dynamics. So that's what we're kind of waiting on here. I wanted to make sure you guys understood as this is kind of breaking down through this, through this level. We were getting into the RSI too, because I want you to know the relative strength index as it's kind of peaking down into this area. Okay, on the 30-minute. This is the 30-minute and along here. The 30-minute. Okay, now the 30-minute is. Okay, going to be different than the 1 hour chart. If we look at the 1 hour chart, look at the RSI now. Whoa. Because we can correlate, guys. Look at the initiation of this pricing action. Okay, let's pull over the Fibonacci just a minute so we can look at this pricing action. I'm going to get rid of this flag, okay, because it's broken down, and we want to see what we can make of this pricing action just based on the RSI. And I want to teach you kind of a lesson in terms of the perils of leaning too heavily on the RSI. Okay, now it's relative, right? It's a relative strength index. Over 70, maybe it's overbought. Or under 30, maybe it's oversold. I say maybe, okay, because it depends on the time frame that you look at. Okay, so as we look at this, being oversold, all right, that means the market maker has sold too much of this. Okay, there's a void, okay, that needs to be essentially filled in the market, and it will be filled typically with positive price action. Okay, it's oversold. The market maker has sold too much of this stuff. All right. And in that trajectory, and the market maker is just the exchange. He manages, okay, your purchase contracts and your sale contracts. That's what he's going to do on whatever asset or financial concern that you're involved in. So oversold, market maker sold too much. Okay, we have an increase in the relative strength index, and look what happens. We're oversold down here, kind of a bottom level. So when it breached this 30 level, yeah, okay, that's an indicator. It's going to go up. It goes up through the roof. That gets 50% for us. Yeah, that's a great gain. That's a good trade, right? So it's an indication. It can be an indication of a good price. Now, as we look at here, well, it hasn't reached that level, right? Now, please pay close attention. This is one thing I always kind of, I always bring up. It hasn't reached that price here yet. Okay, so we would say maybe it needs to get back into this level to achieve a good price. Okay, that's on the 1 hour time frame. Let's switch back to the 30-minute. Notice we're not in this zone in and under 30. All right, on the RSI, that's a critical level. Let's look back at the 30. 30 minute. Oh, look at what we did. Yeah, we already got back into that level. You see? So this is where you can get tripped up. This is where you can, you can look at factors and make decisions that aren't necessarily rationally based, and it's not necessarily your fault. You just need to consider, what's maybe going on with a divergence, or what's going on with a correlation. That's just a relationship, a pricing relationship that Dogecoin is experiencing with, let's say, Bitcoin or some other factors that may be involved. What's is Dogecoin relatively hot right now? Is it? And it is, okay. But there's still a differentiation here, difference between the 30-minute and the 1 hour. So please pay extra attention. The people who have kind of solved this riddle, okay, in terms of the technology involved, and a lot of this is very confusing. I'll give you that, guys. It's not intuitive stuff, okay? And as you learn to operate the program, you need to be able to consider, is this the hour? Is this the 30 minutes? So just consider that. If you're using this as an absolute signal to get in, some people will use the 30 minutes. Some people will use the hour. You want to say, well, which one should we use? There's a greater degree of certainty, okay? It can take off from this level. Let's talk about this. There's a greater degree of certainty. The probability is greater that if you're on a larger time frame, okay? If you're on a larger time frame and you breach this 30, okay? If you breach the 30 and you're on a larger time frame, guys, there's a greater degree of certainty that it will achieve a positive price action. Okay, that it'll be more accurate on the greater time frames. If this goes to 4 hours, etc. As you go up in the time frame, there's a greater degree of certainty. Now it can take off from a different level. Okay, and I bring this up. This was a huge positive price movement. Okay, in and around this target that we brought up and ahead of time. We brought that up and around here. Okay, with hours and hours, and about 8,000 people saw that video, and it just because it was mathematically, it was it was on mathematically. It was just going to happen. The calculations just gave it to us. The program gave it to us. So, but see there. You see this low level here? Yeah, look at the RSI here. Okay, it didn't have to get down into the 30. This is why it's relative, guys. So it's a relative strength index. And just be careful about that. Well, I want to just trade when it gets into this area. There may be more security at the higher time frames. You also may miss out if you're not looking at your Fibonacci's. Okay, and Fibonacci's are real easy to draw, guys. They're super simple. Knowing which peak you're on and where your trend starts, that's where you need some kind of interpretation and kind of some skills to rely on. So we kind of go over those in our Discord and Twitter, etc. You guys continue just to follow us. Let's do a quick shout out to people on Twitter. Looks like we may have some new members. You guys type in The Kingdom here to your search box and go to this. Looks like we got a lot of people to talk about. So let's not maybe going through all that. I think there's a lot of new followers down below and some people we have up to 2,000-3,000 people liking tweets. So we're able to disperse this information to you guys. We appreciate you being a part of the community, and thank you for being civil and just minded up to y'all want to be alpha traders. It's great. And we're gonna continue to try and educate each other, and I'll bring the skills that I can kind of to bear in terms of kind of what my history is able to just remind us. Low, buy low, sell high. You guys know that's real easy. So we enjoyed the channel, though. We're having a good time. And let's see what else we have. So when we talk about the different time frames, all right. Now I was able to communicate with the guys in Discord very well, right? I was able to communicate with them. They all know the double, triple down. Double and triple down as the price goes down, right? Because that reinforces you're going to get a better price, guys. You never want to buy high, especially as you start looking at the overall dynamic here. Let's pull this back a little bit. And let's clear up some of our trades here, because you guys don't know what that is. This is the 6 different intervals here. Let's move. Okay, you can right click on your Fibonacci. Right click. This is the pro version, the premium version of Trading View. So let's go instead of the center. Let's put these on the left. Let's clear up the middle here. Let me take these out. These are just pricing targets we're able to achieve. Now, a pricing target it becomes the equivalent of a trade opportunity. Okay, you can enter a trade at any point in time. We're trying to see what could be reasonable, possibly what could be reasonable in terms of your entry into a certain price dynamic. Okay, that's really important to us because at the right price you might make some money. Nothing's guaranteed. You guys know that. So as we draw out this Fibonacci, okay, we're looking precisely. Right now we're on the 1 hour versus the 30 minute. Okay. So we're talking about the differences in the 1 hour versus the 30 minute. And we cleared all this up so you guys could essentially see some differences in not only RSI, but as we look at the overall levels, what I like to do is carry over the rationale. We are still in terms of the overall pricing trend, guys, we are still in these major levels. Okay, we have hit this golden pocket. Okay, after we retraced back through, and let's clean this up. But after we retraced back through and that was the 0.68 on the overall. There was a differentiation here. There's two different fibs that you could have drawn. If we go ahead and take this all the way back down, and we say, okay, great, let's look at this right now. Let's look at this fib, okay? And there's a reason why we have drawn multiple fibs. They've been very accurate. They've worked for us, particularly on the downward drop, guys. On this thrust through the floor, we were spot on with this 20. The 20 entry was 1948, and it's all through our Discord and our Twitter, etc. It's all through our communications to others, and we're able to bring that to you through the YouTube channel. So we do have some subscriptions and some different means that we're able to deliver content. Guys, it's subscriptions. If you're going to support the community, support us, it'd be great. Private streams, different stuff. We'll get into that in terms of active trading. We don't want to hide information, but at the same time, it just becomes cumbersome in terms of time. And I know you guys only have so much time, so we try and gauge that too. We don't want people just all the time, working on their trading. You guys have a life too. I'm happy to hear when you guys are spending time with your family and doing good stuff like that. Now, as we look at the overall retracement, understand we hit this 68 level of the golden pocket. 61.8 level. What was that? 20 cents. That was 20 cents. 1948. 1948 was our price entry target. Here it's showing at about 20 cents. So the 61.8 to the 65. Okay, 61.8 to 65 is that golden pocket. Okay, that's defined as literally that's just the 61.8 to the and let's look at this to the 65% of retracement or negative pricing action that has been achieved. And we say achieved, it sounds weird to people. How are you achieving a negative pricing action? Well, it's just kind of the, it is achievable because, or it is achieved because you're able to enter into a good price there. So it's an achievement for people who want to enter into Dogecoin or want to enter into Bitcoin. You need to achieve a good price entry. And for people who have achieved a bad price entry, you can see how it's a fundamental part of trading. It's just something you want to get involved in. So we're going to have to kind of square this up here. And essentially, it's going to be the 61 point. I'm just going to knock this in here so that you understand that. We'll redraw this in a moment. It takes a while to customize the charts, etc. And we do that. This level in here is going to be the 78.6. So we want this moved up to the 61.8 to the 65. Okay, that's going to be this golden line here. We can just draw a golden line. It'd probably be easier than trying to customize the chart right now on the fly. We did get to you very quickly so you can understand the double, triple down approach, where we're at in terms of a reacquisition strategy for you guys to understand where your trades are going, where's your money going. If we can help in that process, we sure would like to. If you guys can help us, we sure would like you to help us. So it's kind of a two-way street. Let's look at the, this area right in here. There we go. We got our horizontal lines in effect here. Let me take that one off. And there we go. Let's put in a horizontal line right at the fib level, right at this 61.8, which is the golden pocket, guys. It's called that for a reason. It's a ratio that is repeated. Okay, it's a repeated ratio throughout essentially any growth factor of any market dynamic or price structure. This area, the 61.8 to the 65, guys, that is a repetitive feature in price actions. Okay, that it wants to hit that, it wants to retrace to that, and it happens on these smaller levels. Okay, but on the aggregate, it wants to get down to here. It's kind of a critical growth ratio. That's why they call it the golden ratio. Very critical. So when we saw that hit around the 20, first of all, it was falling off the cliff, okay, in terms of the crash, and we brought an emergency update. I think 6,000 people watched that. We appreciate your support of the channel. Just in terms of tuning in and staying friendly and being part of the community, we couldn't replace you. We really appreciate it. So in terms of that 618 and the 65% or the 65% retracement or the 61.8 retracement, we came in while this was digging down through the floor, guys, and people didn't know what to do. We're like, 1948 or 20 cents is the pricing target. Sure enough, bam. Okay, it hit that, and then you achieved between 10, 20%. Some people got out 10 or 20% on up through about 50% on your trade. So while things are falling apart, while people are worried about, is this really going to, collapse all the way to the floor? Is it going to go up to $1? Whatever it's going to do, we're giving you pricing targets. That's why this is critical, and it's during this time frame. That's why it's really good for you guys to stay plugged in. People say, well, we can't listen to an hour or 2 hours. I know that, guys. I cycle the information so that we can try and maximize our exposure to the community because we really appreciate you, and we have a lot of people from around the world, guys. So from Australia to China to Indonesia, Malaysia, New York to Tokyo, guys. We got all kinds of people at different time frames. So absorb what you can, stay involved in the community to the degree you can, and yeah, we just look forward to being of service somehow, however we can do that within our realm of expertise, which is not complete. It's never we can never know enough about the markets. But that's the level that got hit, guys. The golden pocket on the overall aggregate. Okay, that's on the aggregate. That's making some assumptions right here. Okay, which aren't exactly perfect. Again, we're on the 30-minute time frame. We'll switch over to the 1 hour. And I don't want to start, getting into this realm of, well, you're saying this thing, then you're changing it. No, we're very consistent in our pricing targets, guys. If you want to know the current pricing target, we can either redo it on the micro level or the macro level. If you're trying to accumulate and play this specific trade, it's very different, okay? It's very different to play this specific trade right here and a reaccumulation strategy in here. And I bring up both of these. Now we're on the micro and we're on the macro. I mean, the small, kind of get the magnifying glass out here. We want to trade this and accumulate within this pattern in case it decides to go back up. Because it looks like on the Bitcoin that while it's in the consolidation, and please follow this real quickly, on Bitcoin, while Bitcoin is, we're trying to capitalize on an altcoin interest, on a potential gain in altcoins. It looks like Bitcoin has a little bit of time. Okay, it looks like as it's going into, the triangulation pattern, or whatever you want to call it, a continuation pattern. I'm going to say continuation pattern. As we look at this, at the bare minimum, it looks like maybe if we're real tight on the lines here, we bring out our ruler, get the scalpel out. Let's see exactly let's cut this line very closely. It looks like we have a day left in this channel. During that day, guys, it looks like we may have some room for Dogecoin to trade in and around maybe a positive price action. If it falls through, we might expect another drop in the price of Dogecoin. That's critical, guys, or your other altcoins. The alts might follow Bitcoin if it falls through to another level. That's what already occurred. So let's do it. Let's kind of do a carryover analysis. Let's see how long it's already been doing this. How long has it already been in this channel? Let's see here, guys. Let's see, about 2 days and 7 hours. Okay, let's translate that back into Dogecoin. Let's say how long has this lasted? How long has this, while Bitcoin has been consolidating, okay? While Bitcoin has been consolidating, 2 days and 7 hours. All right, so it's about the same time frame. While Bitcoin has been going sideways and consolidating, all right, what do we have? All right, this makes sense. Now you're kind of getting something here. This is important. While Bitcoin has been achieving something like this, just straight away across and not really gaining or losing, what do we have in Dogecoin? Dogecoin has gone up 50%. Okay, so if that's possible and another move is possible in the next day, before we would expect kind of an end to this pattern, to this consolidation pattern of Bitcoin, okay, if we can break to the upside in that period of time, well, we may be able to execute another trade before we risk. And now there's always a positive side, okay? Before we put, and say the breakout or let's say the breakdown. Let's say the risk is the breakdown. The breakout to the upside. I mean that's a positive. That would be very positive for Dogecoin. We would think it would follow that. If we do kind of a correlative analysis, correlation means they move in the same direction or they don't. Okay, and we can do a layover on the charts. You guys can look at this. If we want to lay over Bitcoin over Dogecoin, so both of you can kind of see, well, what are my potential gain interests? What is my potential profit here? Go up to this plus sign. Click on, let's do a new price scale or a same percent scale or a new pane. All right, let's do a same percent scale. Let's look at, let's do this. Let's do a new price scale. Let's see if that wants to roll over well for us. Okay, look. In and around these, as the charts kind of tell us a story, we're going to look at what has happened with the price of, and you guys will see this right here, what's happened to the price of Dogecoin, okay, vis-a-vis or in comparison to the price of Bitcoin, okay? As Bitcoin has maintained just a trajectory, a sideways consolidation pattern, well, we see that Dogecoin has achieved this 50%, guys. So Bitcoin has been playing around with 2 or 3%. Dogecoin has gone up 50%. So if we have enough time left in this consolidation zone to not risk a fallout to the downside, and this is where it becomes very important to gauge, I say to manage a risk, guys. Manage a risk. Know what you're doing. If you want to consult a financial advisor, go do it. If you want some names, I'm sure you can open up a phone book, or you already may know traders. You may know traders. You also may be one. So if you are one, welcome, and we're glad to have you guys. So you could probably add some great dynamics to the group here. So that's the story, guys. We're in a consolidation pattern, all right, and we're trying to figure out how can we profit off these altcoins. Okay, how can we profit particularly off of Dogecoin, because it's awesome, guys. Dogecoin is doing so well. The price action is phenomenal. We love it. Okay, I'm just gonna tell you, we love the price action. 4 times the money in the last week, 8 to 8 days. Okay, and we had pricing targets the whole way. All right, so that's what we've been bringing to you. And this is a little bit more, I'm going to bring this up as a realistic point here. In terms of pricing targets, now we're bringing pricing targets into the mix here. okay, in this kind of micro level. We also have larger pricing targets, and that's just on the immediate price action. These smaller fibs, right? Smaller retracement levels. That means how much it's going down and at what price you should potentially expect to get in. Why? Because it's the exchange software telling us that. We follow the rules in terms of applying the exchange software. That's easy. We can follow the rules at the start of the trend or the start of the price action and then the top of the price action. So there's kind of a micro element to this that you can get into and say, well, I really want to be disciplined about this. I want to kind of day trade this. I want to get into it. Understand, that means probably an accumulation and along these different levels. Okay, more double down or triple down as you get down into these different levels. Well, with what amount of cash? Like, we're going to run out of money, right? That runs into a kind of a logic trap because you're looking at the overall Fibonacci's in here. Okay, let me take off the Bitcoin for a second so that you guys can really focus on that dynamic, because it's how much money is really being carried over on kind of a philosophical level. If we wanted to look at this kind of an educational standpoint, well, you're going to need cash at lower levels. And I just say that because people ask me, or they come to the forum and they want to ask me a question on Discord. You can ask, it says Ask London. You can ask me a question. Crypto Kingdoms with a K, by the way. But in line with this, we have a very sad puppy. I'm so sorry to hear that, sweetie. That's the cutest little dog in the world, guys. But as we look at the money that's going to be brought over into this level to the right, let me move over these labels and understand this is a critical component for you guys to recognize in terms of your risk. We want to minimize your risk, maximize your gains. We want you to make money. We want you to be happy members of the community. That's it. Some people trade, some people hold. Okay, the holders need to love the traders, and the traders need to love the holders. Okay, there's a place for both of us in this world. So as we hit the golden pocket here, we know we have, and that's this yellow line here. As we did hit this, okay, that's a predefined pricing target that we brought. Okay, it's a nice level. Okay, that's essentially what occurred. On the lower level of this redefined, it got a little confusing because we had a cross what do we say? A cross indication, because we'll get into that later, guys. We had a cross indication on the whether or not this was the real high, because on the candles we achieved a 45-cent high, as opposed to on this pricing action here that was in around April 16th. We achieved 45 cents on the candle. Then on this pricing dynamic, we achieved a 41% pricing action. So there was a drop, essentially a drop in the overall. This wasn't necessarily a new high, but on the line chart, probably what everyone was exposed to was the opportunity to trade in this direction. So there was a cross indication at the top. It was a complication, guys. We dealt with the complication. We hit pricing targets along the way on the way down. It showed true to kind of a redraw of the Fibonacci's at a different level. And that was the redraw, which really set the standard with the Doge crowd. As you guys watch that, you're like, yep, we got it right. We lifted this, the Fibonacci up to this next level to be in line with kind of a higher. And we say we draw on the lines. Those are our rules. And again, the rules are no investment in the red zone, guys. It's expensive. That's economics. That's what the economics are going to tell us. But as we look at this, our goal is to acquire coins at a good or an efficient price. We want to lower our cost basis. So that is the group kind of group dynamic that we subscribe to. So we have this macro, we have the micro, we have the macro, the small kind of detailed magnifying glass, and we have the overall broader picture. So how much money reasonably would be brought into this area? Well, if you just follow the traditional rule here, it's kind of like maybe $100 in this zone. This is kind of the double down approach. This is what the big players on the street, this is what they do. They literally sit in front of a camera on Bloomberg and they say, we're ready to double down at different levels. So why don't we follow what they're doing, the best traders on the street, okay? And I've been really good friends with a lot of dynamic traders. Some of them have done really well and some of them have gotten burned. So as we look at that, I want to do what the best guys right now with the biggest firms, BlackRock competitors, 3 trillion, 5 trillion, 6 trillion, okay? What they're doing, they're ready to double down at lower levels. Good. So we incorporate that. It's a logical manifestation or logical kind of agreement and behavior with market participation, right? If you buy in high, you're going to get washed out. You're going to be down at a lower level. And if you had bought in at 45 and you're going down to 20, guys, you just saw $100,000 turn into 50 grand. We're going to bring up the fact that maybe we have a strategy in line with the best traders on the street. Okay, we adopt their strategy. We want to publish that to you, their strategy, in terms of it being, an accumulation at the lower levels. Otherwise, you don't want your money to lose 50% of its value. $1 million turns into $500,000. 1,000 turns into 500. No, thank you. Okay, so the way we get around that in the red zone. Okay, there's no investment. It's just too expensive. A demand curve says when it's really expensive, economics says, okay, the business says, well, there's no demand, right? There's no demand. As you get into this level, maybe there's $100. Just pepper in at the top levels. All right. Then as you get down, well, maybe we double down again. And I'll get through this double down approach, but that's on. Look at Bloomberg. You'll see some different big cats talking about doubling down at different levels in Bitcoin, etc. Okay, so this is a heavyweight approach. I say it's a heavyweight, on the downside with double and triple down as you get down to the lower levels of the Fibonacci's. Standardized framework, standardized technology, guys. This is a standardized program that we're using. I did not create this program. I did not create these Fibonacci's. This is what they give us to use. So we have a community to use them and to explain them. We're in constant discussion with each other. And that's what we're trying to do is to enlighten each other, kind of, get a strategy together, a group kind of strategy. So I'm glad to be able to bring that to you. As we go down to the next level, if we go, let's say 100 here, we double down into like 200 is maybe available. If we're kind of trying to replicate a demand curve at lower levels, there's more demand. Okay, we're willing to buy more of it at a lower level, right? Yeah, as we get into the teal, maybe we take this full amount and we double it into 300, right? As we get it down into the next level, maybe we add all this up and we're going to double all that. All right, the double down or triple down. Essentially, it's the triple down of the preceding level. But we could add all this up from the 100, 200, and let's say if we took that, that's 300, and we'll say, okay, this is 600. But then we could take the 600 and we could triple down to 1800. We could take the 1800, we could triple down to 5400. The point is, you may differentiate exactly what you want to be your multiple as you go down into different levels, okay? You may differentiate what you want that to be. This may be 10x down here. You may be saving all your cash. You want to collect all the eggs in the basket. You want all the eggs out on the field, okay? It's Eastern. You want to pick them all up. That's it. At the higher levels, guys, you're not going to do that if you throw your $5,400 in up top, guys. You're just not going to. You're going to lose your cash. If you throw it in at the red level, kind of the red zone, warning, okay, you're going to lose. If you throw in 10 grand or 100 grand, you're going to lose half your value. And just as a part of the natural function of the market. Guys, this golden pocket that it hit right here. All right, guys, we talk about the golden pocket all the time. It's 61.8% retracement. That's all it means from the initiation of the trend to the top of the trend, to the peak or the apex of the price action. Okay, a retracement to 61.8%. Okay, now this differentiated a little bit. It got into we had a cross indication on top. I'm not going to get real technical with you guys I'm sticking with this right now because it's more basic. Okay, we can get into the complications of how we were able to hit each and every one of these pricing actions. I want to, and I'm saying, guys, people hit it for profit in our group. If you want to be part of the group, follow us, plug in notifications. You can join, or I think you can join now the YouTube. Private streams, etc., kind of backdoor access, and that's just what we kind of provide. You don't have to pay for this information right now. It's a public stream. We enjoy having you. Just in terms of timing, I wind up spending a lot of time with people who want we do sessions, kind of private sessions, if people really want to learn stuff. It's just, I'm happy to help, but it's also a function of, do you really want to learn? That's where I get into. You guys really want to learn? Do you want me to spend this time? If you guys like this video, go ahead and hit a thumb up so I know. Maybe if you're new, if you just kind of joined in, you haven't been here since the beginning, go ahead and give me a thumb up so I can see that reaction. I see how many people are new, what we need to cover in terms of the pricing action of Dogecoin and potentially Bitcoin and how it'll affect Dogecoin. Give me that thumb up and I'll know kind of what we need to cover if you're new to the chat, if you just kind of plugged in, and then I'll be able to gauge what we're going over in terms of content. So that is it in terms of, kind of a golden pocket being hit. Now, some people say, well, we actually hit that on a different interval. We did, okay, but that's kind of like backdoor access. That's it's more of a sophisticated approach in terms of this breakdown from a differentiated, okay, or if we're going to pull up a different fib in along here. Then your golden pocket was up in this area, and then we broke through. It was really above the golden pocket. Then we broke through. He tried. The market maker kept this out of the golden pocket. I think you guys had gotten in because we had mentioned, depending upon your exchange, you may need to get in at a little bit of a higher level. And I'll bring this up because it's phenomenal to watch what the market maker did, the extent or the lengths that he went to keep you out of that golden pocket. And I think it's just because you guys had orders there. That's the bottom line. I think you had orders there, and he decided to go ahead and pick up those orders. The 61.8, if you look at his previous golden pocket. Now, it didn't hit hard. It got abbreviated by the fact that Bitcoin wanted to just, pounce down. When you guys see this red action on your trades, if you're watching your trades, okay, live, you're going to start seeing this thing is bleeding, okay? When you see a nice velocity to the price on the upside, typically it's pretty comfortable to stay in a trade. When you start to retrace and it gets heavy, it's like it's bleeding. This red just starts to accumulate. You'll notice the downward trajectory, the downward kind of the pressure on the price, and you'll know it's like, well, yeah, this is problematic. This is not going. It may be time to go ahead and maximize your gains there. 20% gain potential. I know some people who made a little less, typically 10%. A lot of people in the group are happy with 10%. If they can do that 7 or 8 times, they doubled the money. Okay, so I know a lot of people into 10%. Other people want to get in at a great price and hold. You may make 10% here, cash out. You may decide due to the nature of this and this diagonal pattern, there wasn't a real reason to get out of this. This was a nice trade. What was this other one? About 60%, guys? On this pricing target, 60%. We were live during this, literally live the whole time. As it started to, the channel was beautiful. About 8,000 people watched the video, said, yep, that's the fib level. That's what the program's telling us. I'm the conduit here, guys. This is not a personal opinion. This pricing level in not the first tier level, the second tier level, bam, third tier, heavier money. We've already doubled down once. Now we're tripled down, bam, riding that money all the way up to the top here. And that was when the coach just blew the whistle. I literally heard in the background someone had a football movie on or something, a football whistle blew, and I'm like, yep, the coach is blowing the whistle. Out for like 60%, guys. Phenomenal trade, and you didn't have to watch your money go down by 50%. So that's phenomenal. That's the kind of mastery of the markets that we really like to see. Congratulations to those you who traded that. Along the way down, I'm just gonna bring up that like in here, and if we go into a more relative time frame, a tighter time frame, the market maker was just absolutely insistent on staying out of the golden pocket at some level. You guys picked up the trade, the ones who did listen. A lot of people who are doing well are the ones who listen to the stream. And I know it's a long stream, guys. I know a lot goes on, but I have people who flow in and out of this that to the tune of 50 will come in, 20 will go out. Everyone wants to, your average attention span is like 20 minutes, okay? So, in terms of getting this out to as many people as possible in the community, I kind of take it upon myself to say, okay, look, I'm going to go ahead. We'll do this for an hour, 2 hours. Make sure that as many people are up to date as possible, as quickly as possible. So that's what we try and do is just facilitate that so information doesn't just sit. So turn on those notifications and just enjoy that. I will bring up, you guys are already on the Twitter and on the Discord. And yeah, so we're looking at the micro level versus the macro level. The macro level, if we bring over the macro on into this, okay, macro is just a big picture item, guys. It's a big picture look at things as opposed to having kind of the magnifying glass, okay? We're always trying to be very accurate on our Fibonacci's, on whatever technology we're applying, okay? If you have different ways of operating your technology, that's great. If you have more experience in terms of actually being a licensed Series 7, that's great. I'm not picking the phone up. They asked me to do that at Morgan Stanley. They gave me an offer, and I said no because I don't want to pick the phone up and really. I don't think that's not my calling. Some people are very good at that, and I don't want to deal with the other side of that. If there's a big huge market correction, and I'm supposed to be selling what the firm has been recommending, etc. It's just kind of I don't know. It's just a different approach, and I don't know. Maybe that'll change. Maybe my opinion on that will change. Maybe I'll be in those offices one day. But right now I'm fine with where I'm at. Just kind of discussing nice things like crypto. It's kind of relaxing to be with you guys. It's a good environment. So again, we're on the 30-minute. Look at the RSI on the 30-minute. It's looking pretty strong. Huh? It's looking like, well, to tell you the truth, it's looking oversold, right? Now we just went through the fact that it looks oversold right now. Some of you may say, well, it's a good time to get in on the RSI, right? Yeah, it's a good time to get in the RSI. We're gonna double or triple down that money into it, right? Well, let's look at the 1 hour, right? Let's look at the 1 hour is a little different. There's a reason that I'm playing in between the 30-minute and the 1 hour right now. Okay, the reason is. Let's look at this, okay? We're in the 30-minute, okay, was already into this level in around the 30, showing oversold, right? Oversold. This is going to be overbought on the top. Oversold means, yeah, the market maker needs to bring this back in, the RSI, and as that occurs, the price is going to go up. So this is kind of an indicator for a lot of people to get involved. But there's a difference between the 30-minute and the 1 hour. On the 1 hour, which we're on right now, we have not reached that oversold position. Look, we have a ways to go. So that would incline us to think that we may reach a lower level. Okay, on the overall here, and there's just some differentiations as we look at that. Then we start to look at confluence. We look at the micro, okay, applied here versus just the macro. And the layover events are going to give us the greatest degree of probability. Some of you may just say, you know what, at this point, I'm just ready to put the money in. When you get lazy like that, when you don't want to work your technology, when you just decide there's no such thing as a pricing level, that's the same thing as buying in here, guys. You may buy in here and you lose 50% of your money. Be like, no, it didn't work out. A little bit of discipline goes a long way in terms of just adhering to the buy low, sell high. The accumulated strategy, and it turns into a little bit of a workload in terms of staying staying up to date on the information, kind of watching that market, being kind of dedicated. And you can sit around and watch videos all day long, guys. A lot of people do. But when you actually get into the application of the skill set, kind of the craft that you're doing, a lot of you guys want to trade professionally, you know. You may have things to teach me very soon or right now. That's phenomenal. You may be the one saying, now look, this is not financial advice. And a lot of our alpha traders, that's just the top level rung of guys who really are committed to learning in different sessions, et cetera, in Discord that we go through, screen share and all this different stuff. I can share with you what I've learned from having some of the best traders on the street around me. So that's just, that's the truth. I've hired an individual who I thought was the best trader on the street to run a private hedge fund for me, just some cash, and he was phenomenal. Top guy from First Boston, really great guy. So I hope he's doing well. If you're listening, brother, how you doing? Good to know you. It's a stressful job, so I'm glad that I'm not in those boots right now. So what we're trying to look for is confluence, right? Let's see if we can find that confluence. Let's see if we can eliminate some of this noise here. We're looking for kind of an overlap, right? Yeah, we're looking for an overlap. Let's go ahead and do this on the hour. Okay, I'm doing on the hour right now instead of on the 30-minute Y. Well, when we were really solidified into this, okay, we were really day trading and through this, we were really hammering through the different information on a very micro level. Okay, I've just published also, I think to the Discord, etc., 30-minute intervals. So let's go through the hour intervals. Now, what we're looking for is kind of a confluence, right? And this kind of gets a little bit messy. Let's see if we just want to move this back over at least into this area so we can at least have something nice to look at. Let's see if we can have something nice to look at. We may even want to look at whether or not, guys, there's more confluence at the 30-minute or the hour. That may be a better indication in terms of whether or not we should rely more heavily on the 30-minute versus the hour. Okay, so this is kind of where we're at here. We also want to check in. Are people playing the candles versus the lines? We're going to have to look at this stuff. This is a sophisticated market, so this may be occurring. The bounce looks like it is happening on the candles. This will just show us literally where the line may not show us. This is showing you that yes, this appears to be accurate. This is hitting this level and achieving a positive price dynamic in the first category. Okay, maybe pepper in some money here. All right, pepper in a little bit of cash. Why? I don't know. Pepper in a little bit of cash. It's up at about 4 or 5%. All right, that's not much. And depending on the amount of cash you're playing with, this can turn into something, guys. This turns into something. I don't know what your peppered in cash is. If you're running $1 million account, whatever you're doing, that's fine. This amount, another 5%. Bam, bam. So people are hitting this with limit orders, okay? They're doubling down most likely through this region. And yeah, as it gets into the teal, they'll probably run that again. You'll see that it's very typical for people to literally just hit 5%. As it gets down into heavier weight money, again, it's a better price. So the demand curve would literally dictate the fact that guys are getting into kind of a double or triple down approach. Some people will say we're programmed, we're willing, and on program trading, et cetera. That means that you're going to enter into a limit order, okay? Most like a limit order. You guys check your informational videos. I think you can watch an 8-minute video at Robinhood and you can start trading options. So that's the advice they give you. I'll just give you the advice to watch their advice. How about that? That's the only advice I'll give you. You watch their informational videos and decide if you want to go trade options. I think it's like a 10-minute video or whatnot. I'm not going to suggest you do that. I would suggest that you really pay attention to what you're getting involved with and just be careful. I don't like people losing money. That's my deal. And I'm not here to help you lose or make it necessarily. Just let's interpret the overall and understand the overall pricing dynamics as they are communicated to us, okay, from the trading program. Okay, the trading program is literally the trade desk. Binance gives us the interface of TradingView. All right, it gives us Fibonacci's. It gives us the tools necessary to enter into a price dynamic. All right, as you see this price dynamic, look at this, guys. It got in through this this beautiful area here, right? The same thing we're going to see over here on the major TradingView. That's the third level down, which is just going to be the 50% retracement. Okay, I'm carrying this back over to here because Binance doesn't have all the bells and whistles. Okay, it doesn't necessarily have the same functionality as TradingView.com. You can get a premium version or a pro version. Data is your friend, okay? All this information is your friend as you're trying to come up with a good price strategy. And you'll be heads and tails ahead of anyone who asks, well, what's going to happen to the market? Where's it going? They want to know 6 months to a year from now. Well, where is it ultimately going to go? Well, I just tell you, it may go, it may achieve a lot of positive price action, But if you got in at 50 cents or 45 cents or 40 cents, let's say it got up to 45 cents on Dogecoin, or let's say you got in at 64,000 on Bitcoin. Well, now Bitcoin's at what? Well, Bitcoin's at 50,000. Guys, you're going to have to make 30% of your money. Just pay attention to this. You're going to have to make 30% of your money at Bitcoin right now to break even. That's a big amount. That's a big trade. Now we make that. We try and make that on Doge. Probably less amount of money. I'm gonna say less amount of money. Than most of you aren't just leveraged into it hundreds of thousands or millions of dollars like a lot of people are in Bitcoin. And that's okay. You're learning to trade. We're all figuring out these programs and what they can tell us. Okay, in terms of the Fibonacci retracement levels and accumulation strategy, heavyweight double down. Okay, we're doubling down at different levels to make sure we're in operation with the market dynamics. Regular demand, right? High levels, 0. Ultra expensive price, 0. Right? No demand, okay? As it works down, we start to double and triple down. $100, maybe $200, just as an example. Let's say we double that whole amount. That's 300, so let's say 600. 600 and 200, 100, that's 6, 7, 8, 9. So let's double that down, 1,800. Let's take that whole amount, add that up, and then bam. Okay, we got 1,800 and we could just triple it, okay? That's the accumulated, that's the total, sum total times 2, or the 1,800 times 3 is just 5,400. That just gives you an idea of kind of the strategy that's been been used on the street, that's being discussed on Bloomberg, et cetera, in dealing with cryptocurrencies. I don't know anyone else who's just, letting you know what, kind of the big guys are trying to do and what they're discussing in public. You really have to read between the lines to pick up on what they are doing, but that is what they've expressed. So I'm happy to re-express that to you and for us to try and capitalize on that. It means that we have kind of two dynamics going on, and we don't always play these lower levels here. The reason that or these smaller intervals, these smaller price actions, we could just completely back off of this, guys, and we just not worry about it, and it's no big deal. And look, okay, it's already hit this level. Okay, it's already hit what we'd say the golden pocket, this 61.8. Look to the left here, 61.8. All right, 61.8 to the 65. You see the 618 right there to 65 just means from the initiation of the trend on up to the positive price action, the peak of the price action. Okay, we just draw this like this. We click on the Fibonacci and we go right up there, and we make sure it's right there to the top of the price action. We just bring that over to kind of color in the screen a little bit, give us those pricing targets so we can visualize what's going on. All right, it's real simple. It's that easy, guys. It's just that simple. And look, we hit right in along this 618. It's telling us, the software is telling us, this 618, right? 20 cents. Beautiful. While we were in the free fall here, we called this area. That was essentially a confluence between this dynamic, okay, and this dynamic. Okay, you see, now it turned into 0.786. It allowed us to do that. That's what we chose to do because it gave us different levels along the way to hit. We brought this up here because essentially, you'll see the reason why we did it. It was to take advantage of some other opportunities, trade opportunities right here. Bam, trade opportunity. This one here, bam, trade opportunity. And then in here, trade opportunity. If we had left it down here, and we did this ahead of time, guys, we call this ahead of time. If we had left it in here, we hit a trade opportunity here. We hit one here. We missed one of the trades essentially if we had gone with this longer price action. So that was important for us to have done, and we just spot on. We hit all these trades. It was nice. So that was good to see. Now we can just relax on this. If you guys just want to relax and have a great weekend, no problem. Or if you want to learn and kind of apply your skills, you can paper trade. Guys that's working with the program or something else, and just maybe you feel like you want to paper trade for a while. That's the terminology given to people that just want to kind of trade on paper. They want to say, well, I'm going to enter into here. I'm going to enter at this price. I'm going to exit at that price. Go ahead and line your limit orders out. A limit order is just I'm going to pay this much for this amount of coins. Okay, so you set your price target ahead of time with limit orders. Say with a limit order, I want to pay 20 cents. I want to spend $1,000 at 20 cents. All right, great. You may say, and then maybe I want to sell. That's as much as I'm going. That's a limit I'm going to pay to enter into the market. Then you may say, I'm going to sell those at 21 cents. I'm going to sell all the equivalent of 1,000 coins. I'm going to sell those at 21 cents, and that'll be my profit. Okay, great. That's what you can do. You can do that on paper, or you can do it in real life. These are just the levels at which we become interested in entry. Okay, just because, guys, it's pre-calculated. It's really simple. So we don't have to play with this smaller price action here, this smaller kind of nano fibs, right? We don't have to go with nano fibs. We might do that if we think it's going to go up, because we want to maximize our exposure, guys. We want to maximize the exposure to the coin on the instance that it's going to go up. And it just looks like, it has been very strong, guys. And the downside of the potential risk here is that Bitcoin wants to drop down again. Now, when it just dropped down here, like when it dropped down here, we experienced some negative price action. Now, look what's happening in Bitcoin, guys. Exactly what I said could happen. You see the reason I didn't want to draw out a triangulation? Okay, I didn't want to draw that out. Please pay close attention. We've been talking about double, triple down, big weight, heavyweight strategy here. Okay, I went through this earlier in the stream. You guys who are brand new, pay attention to this because I went through this already. Everyone is drawing out triangulations. They're going nuts right now on this, right? It's broken through the channel. Bitcoin is broken down out of the channel. Okay, it has. But we have to make sure now that it's not just, and it looks like it's gaining some acceleration. Okay, we have to make sure it's not that. All right, and we have to also make sure it's not that. All right, so I'm very cautious about this stuff. It really has to gain some traction. Some people will want to just play kind of a massive market psychology on this. But guys, if it decides to kind of bounce around here and you're forming a different level or a different continuation, either a downward sloping channel, okay, or wedge or something like that, instead of that triangulation, this can wind up, getting a lot of people in and out of other issues. Now, we want to compare this. Let's just leave it there. Okay, let's leave that there instead of. But you see how the triangulation turns into a downward channel, into kind of a downward, a different kind of continuation pattern. Okay. Yeah, it turns into a different continuation pattern. Now, is that consistent? We want to judge the consistency of that with the previous event here. Yeah, let's look at that. Now, instead of, because you could have drawn this, guys, as everyone's drawing the triangulation here, you could have drawn that up here. All right? Now, that I guess would have worked. You could also say, well, it also could have just been kind of a horizontal pattern. It also could have been something like this, where, let's say the horizontal line right here, it also could have just been a horizontal line, okay? Essentially a horizontal channel. It does show some bearish sentiment in terms of the resistance line. It is falling off. This is showing the same, okay, bearish sentiment here, the bearish kind of resistance line. But it is showing the resistance. So you want to go to candles? Let's make sure on this. Let's look at the candles. Okay, yeah, it's showing kind of a bearish nature. The difference kind of here in the first and around the first round here. Okay, it's not that much. It's not really heavily into a triangulation. It just isn't maintaining its strength in along this third kind of impulse here. Okay, it's just not maintaining that strength. Okay, so it turns into something that's triangulated, but at the same time, it's still even cutting through kind of this mid-level pulse that it went through. So as you work these, I would look at them as consolidations. I would just say this is a consolidation of what is occurring, and we're looking for kind of a breakdown from this generalized consolidation. Consolidation, okay, on anything you look at, is just going to be an upward and a downward, kind of within a defined range. Don't get real tricked into essentially right now a pattern here. Now, I'd say a pattern before it's really recognized itself. It turns into a self-fulfilling prophecy. Everyone thinks, well, it's a triangulated pattern. Just focus on the consolidation, focus on the breakdown from the consolidation, and make sure you're prepared, like we are on Dogecoin right now, for this possibility that it wants to break. Now, the key level, you guys, I've already guessed, where's the key level going to be? Yeah, the key level, as this goes down, the key level will draw it right here. Bam. That's going to be the key level when it breaches this. All right, there's a level of support here already built into the market. You guys know that? Okay, these are buyers that have already come in and thrust into the market at this level. Okay, so the notion that this level, that the buyers would walk at this level and say, I'm gonna go ahead and walk in and around this 47.49. Okay, the 47,000. They've already come into the market once at the 47.49. Okay. So the fact that they're going to say, well, now we don't want to hold that line anymore. That's when you start maybe looking at the differentials on the RSI, the relative strength index. You want to say, well, in between here and here, what are we going to be looking at? We reached this RSI to enter into a consolidation pattern. Okay, we reached that previously and around the level of this support line. If we reach that same level in and along the support line, it is possible that we're able to not dig so deeply into this. Cause we've just got, excuse me, the dog's gonna be barking. You guys are dog fans? I hope so. They're gonna probably be going nuts here for a minute. I think someone just has arrived home. That is a beautiful thing for me. That's a good thing. In fact, I may take a break. Someone has just arrived home. So, anyway, I think I will want to do that. But what we're going to be watching right now, guys, is a breakdown. I essentially, let's call it a breakdown from the channel. Still, I want to see a breakdown from this zone. If you're playing this on a short, understand this is critical. I would watch this zone. It already surprised us once. Decided to go back up. Watch your RSI. See if this wants to channel back up in here. The next zone is going to be, we're going to get into some different kind of figures for Bitcoin. It's going to be 43.9. This is the kind of breakdown which can drastically affect your holdings in something like Doge. Okay, so as we look at this, yeah. Now, what's going on? We're looking at this retracement. Okay, we're looking into a retracement of this recent price action, a 50% gain. You guys made a great gain on this. Okay, I'm very happy that you guys in the community made a 50% gain while the market is falling apart. Right? Beautiful, 40, 50%. We go to the line chart, et cetera. You guys did well. Some people made 10 to 20%. Our goal is that while things fall apart, we can accumulate and we can essentially go heavyweight on the way down, double and triple money at the more reasonable levels, act like a normal market participant who wants more. Okay, more coins at a cheaper price. That's kind of what we preach. Okay, that's essentially our strategy is more coins at a lower price. We buy low, we sell high. It's real simple. So as we look into this, the RSI has differentiation on the 1 hour versus the 30 minute. If we can tuck down in here into this, we may still be able to kind of achieve an RSI that's worthy of kind of, I'd say, a pricing event, a positive pricing action to the upside. Now, will that occur at this next Fibonacci level? Potentially. That's what we're going to hope, is that it'll occur at this next Fibonacci level. Okay, this 618 at the 20 cent. It's already hit that 20 cent really hard. It may decide to do that again depending on this relative strength index. So let's stay tuned, guys. Go over to the Discord. Go ahead if you'd like more videos like this. Hit the thumbs up if you'd like me to come back and discuss some of these issues. And if you're just tuning in, we have more pricing targets to get to. We'll cover this live. If you'd like more videos like this, go ahead and hit thumbs up for me so I know that we may want to do this later on today, and I may just jump back in the action. And we'll go through the pricing targets on kind of the micro scale, and we'll keep you up to date on the Bitcoin fallout, live stream on Bitcoin fallout potentially, and fallout from this wedge, and the implications on your altcoins. So a lot of the altcoins are turning right now, guys. You were up on ETH, you were up on a lot of different issues. As this crashes down, we typically have a very good audience in terms of crashing. People like to watch this crash channel. It's well publicized. We have a lot of technical minds, so hit that thumb up if you want to go ahead and hear another stream later tonight on the same amount of information. That would be great for us to achieve those before we go. I'm going to go say hello to who just walked in the door, and that's not just the puppy, but I have some little duties to do real quickly, and just a little hello kiss here or there. So I'm going to go do that, and then I will